Hello and a warm welcome to Talking Stocks. I'm Gugulethu Cele. In studio with me is Bryan and David Gibb, both from Anchor Capital. Now today we're talking the American Express Company, an American multinational financial services corporation headquartered in Manhattan in New York City. Founded back in 1850, it is one of the 30 components of the Dow Jones Industrial Average. The company is best known for its credit card, charge card and traveler's check businesses. Gentlemen, thank you so much for joining us today. It sounds like a very interesting company, and I think we've all become accustomed to it as, like we say, a financial services company. But Dave, you've got some interesting stories as to how the actual formation of American Express came about.
Yeah, so in 1850 it started out as an express delivery company, and it evolved over the years, and then I think in 1891 they started issuing American Express traveler's checks, which is what we're probably all familiar with. And then I think in 1958, they launched their first travel charge card. And they were behind Diners Club was the first issue. They started in 1950. So 1958, and that's really when the card business got going. And it's really become the wealthy American card that you have in your wallet. It's not your first card. You bank with a Citibank or a JP Morgan. But you do a lot of your spending on your Amex card, and Amex look after you. So you get all sorts of points, loyalty points, and I think you feel very special as a big spender with an Amex card. You get treated well at airports, all sorts of things. So it's got a very high customer, and we'll probably come to this, a very high customer satisfaction.
Tell us about that, because does that potentially play an element in the business case and a retention of customers, Bryan, David?
Very much so. You know, you've got, I mean, if I'm going to equate it onto a South African perspective, where each of the local banks has an e-bucks or an incentive program. American Express pretty much came up with this loyalty program a long time ago, where you got these points, you got the rewards, you got into the travel lounges in airports. And it does play a little bit of a factor in customer loyalty. Again, you have to continue to satisfy that customer and ensure that he's happy with what he's getting. But it does, you know, when somebody moves away, they go, oh, well, now I can't get into the luxury lounge at the airport. You know, if you go and look at American Express, they've got what they call the black card. And the black card is the IT card globally. There's no limit, there's no nothing. You swipe it, it goes through. You then have to settle, but it goes through at the time. So I think the loyalty side of it very much actually keeps the customer with them. Everybody's trying to filter into that space now, so it's becoming a lot more challenging to keep your client, keep offering him something more, and keep exciting the customer. They seem to be doing it quite well at the moment, and as I say, their loyalty is still there and their customer satisfaction. Going forward, it remains to be seen how they continue to execute on that plan.
I'm happy you touched on that the fantastic element to any shopper's guide. I'm already obsessed. But if we take a look at the opportunities that might be proposed here, I take it that the world is moving away from check. Is it all now about the card and how much access that this card can give you? Is that forming part of their business case?
That is, I mean, that is the prime reason why you'd be interested in a card company like Amex. So the fundamentals are great. If you look globally, most purchases are still, the majority of purchases are done with cash or checks. And in some countries, in fact, very little is done on cards. In countries like Japan, for example, there's just an aversion to using cards. I think in Germany, merchants in Germany are reluctant to accept cards because they don't want to give away this discount rate that they have to pay away. So they would prefer people pay them in cash too. So the long-term potential in a business like this is fantastic. Your volume growths will be excellent as the move to plastic continues.
Just to sidestep for a moment, looking at that graph that was on screen a moment ago, which shows us that payments volume in the pie chart, you see that there's check and cash, credit and charge, debt, as well as prepaid. But fundamentally, how does this organization then make its money? Is it based on the fees? Is it based on the amount of transactions that go through, or the cards that they actually issue out?
So it's really about spend. It's not about necessarily offering credit to customers. It's about spend. And I think, you know, the amount that goes through on an Amex card every year is about $1 trillion. $1 trillion is swiped through an Amex card every year. And what they do is they take a thing called the discount rate. Effectively, they take about 2.5% of any transaction that goes through on an Amex card, Amex keeps that.
Sure.
And that makes up the majority of their revenues. And then obviously there are all sorts of other fees that will be added to that. For example, on the credit card, which is not the major part of the business, the charge card is a bigger element. But on the credit card, they can also make net interest on outstanding balances. But that's only about 16% of their total revenue. Mm-hmm. So it's really it's all about spend. And it's important that their customer base of wealthy Americans, and there are about 55 million cards in the US, that spend grows in high single digits every year. Sure. And Amex takes their little cut of the discount rate.
Mm-hmm. With the Costco challenge, though, is that a particular issue that might arise when it comes to operational efficiencies in the business?
Taking one step back on that, Amex has pretty much three areas in which they work with, and one of those is co-branding, where they will actually go with the Costco and co-brand a card, and that card gives that Costco customer additional benefits or potentially better incentives. And they've done this with a number of different clients in the US. It's about 23% of their annual income. Of that, 8% or 8% of the total is Costco. So it is a big number in their lives. It's about $80 billion. So it's a number. However, the interesting thing around the Costco setup is 70% of all their co-branded, so not specifically to Costco, but across the whole co-branded, they actually spend away from that branded store. So somebody who's got a co-branded Costco card is spending 70% of the money away from Costco. So they have lost this deal. It finishes and expires on the 31st of March 2016. So that deal will come to an end. There is a threat on this 8% now. However, if you go and look at the base, that they need to try and save that other 70 now. So the 70% of the $80 billion, they need to try and save. They need to go to their client and say, right, we can give you an Amex card or another co-branded card or some way to keep that person still swiping their card. Costco has moved across to Visa. So now you want to incentivize that client to stay with Amex. So there is going to be a slight impact. That's come through already. They've already highlighted that earnings for the 2015 year will be flat, if not down by 1%. Returning back in 2016 into the positive, and then 2017 getting back to their target of 12 to 15% earnings growth. So it is going to impact them. We personally feel that it's actually, the market has discounted this. They're going to lose all 8%. It's gone, it's finished, and potentially even more. And the share price has been under a little pressure under that thing. But we do think that's a little bit overcooked at this stage. So it's going to impact, but potentially not as much as people think.
We'll get into the valuation of that particular share price in a moment, but I want us to touch on two things. The balance between the customer satisfaction, as you've alluded to, which continues to lead the pack, but also the fact that their costs have actually been declining, the charges which they charge on the cards. The balance between that, keeping customers happy, meanwhile declining costs, and at the same time trying to remain profitable and a positive share that will continue to see an upward trajectory. Is that a bit of a challenge for the business?
Well, I think so. We're referring to this discount rate where that has been trending down. I mean, it's come down 10. It's gone from 2.6 to 2.5 over 10 years. So it's been a very marginal decline in that discount rate. The regulators are stepping in. There's no question. We've seen it in South Africa. We've seen it in Australia. And basically, the problem in this industry is that the merchant, for example, in South Africa, a ShopRite, doesn't have much control over what charges the card company puts through when you buy something in a ShopRite store. They don't have much control over that. And so the regulators are stepping in and saying, look, we think the card companies are charging too much, so we're going to try and regulate. And there has been regulations introduced in South Africa, and I mentioned Australia. So there is pressure on the charge rate that the card takes over a period. In the US, we haven't seen that yet. They try and restrict them in some way, but we haven't seen it. And this, remember, is primarily a US company. So of the $1 trillion that gets spent every year, just under 70% is spent in the US. So it's very US-centric and generally a very business-friendly environment. So I would argue for Amex, they will feel some pressure, but they need to improve their volumes. So it's really about the volumes trying to offset any decline in that rate that they can charge on their card.
Time now to get our experts to answer the important question: buy, hold, or sell American Express as a stock. Bryan, let's come to you first. Is it a buy at what, $81?
We actually hold it in our core segregated portfolios. We're pretty much looking at it from a hold perspective at this stage, with the opportunity as we get more information. This is a company that's currently having one or two problems. Not really problems, setbacks, if you want to call it that. And we think it's overcooked. We do think there's potential that you could start acquiring a position. But from our perspective in our current portfolios, we're actually holding it with the view to potentially again upweight through the course of time as more information comes through.
David, I take it you agree?
Yes, I've got it in my Worldwide Flexible Fund, the Anchor Worldwide Flexible Fund. I've started buying in the last few months.
Because the share price took a bit of a dip.
The share price is down 12% this year. So it started the year at $95. It's actually gone as low as $74. So I've been buying in the $75 to $80 range. And I'm going to continue to buy shares over the next year or so as they get through this sort of Costco impact where they've got to spend to try and get those customers back on their books. So I think for a great business, that's, it's got a fantastic heritage and it's really tied to the wealthy American spend on their card. You want to buy into a blue chip like this when it's experienced what I think is a temporary hiccup.
Just to steal one more question though, is this the opportune time maybe to purchase a stock like this, given the fact that the US is expected to recover? We're hearing about the potential positive growth prospects to come out from that economy. So clearly it must mean the wealthy will only get wealthier.
Correct. I mean, I think what we're saying is that the US economy of the major economies has probably got the best outlook for now. So if you want to buy into a spend-related business, why not do it in the US? And Amex certainly foots the bill for that.
Well, that's it. And if we actually go back and have a look, they have been managing to grow the bills and the swipes through the last little while at 10 to 15%. So the number of swipes are going through. It's a known fact that the rich get richer and the Americans keep spending. The economy is recovering. So I think it's very much a good mood and a good place for them to be at the moment.
Well, we'll leave it on that note. Clearly a buy coming through for American Express as a particular stock. But that's where we have to leave it for this week's edition of Talking Stocks. A big thank you to both my guests, Bryan Rudd and David Gibb, both from Anchor Capital. Do catch us again next time.
For the latest fundamental and technical analysis delivered right to your inbox, log on to talkingstocks.co.za and sign up for the Talking Stocks newsletter.